Today we're going to be talking all about your mortgage options if you earn £30,000 a year. Hello, welcome back to our channel and podcast. My name's Gemma, and here at WIS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up button. It really helps with our YouTube algorithm, and it also means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we are joined by Ifti, and for those of you who haven't seen our other videos, Ifti is a trained accountant and mortgage advisor who has been in the industry for over 11 years, and he's also one of the founding directors here at WIS. Welcome back, Ifti. How are you doing today?
Hi, I'm very well, thank you. How are you doing?
Yeah, I'm good, thanks. So today we're going to be talking all about kind of like a case study, I suppose. If you're earning £30,000 a year, how much can you expect to get as a mortgage? So if we're talking through our options, let's just start with, can you even get a mortgage if you have £30,000 a year salary?
Good news is yes, you can, right? A lot of banks have a minimum income requirement before you can apply for a mortgage, and usually it starts at about 25,000, right? A lot of high street banks start at about 25,000. So good news is 30,000 will help you apply for a mortgage. So that's really good news, right? So yeah, I mean, again, it depends on the bank. Some might have slightly higher requirements, but most should be okay with 30, right? So that's a good starting point for many, yeah.
So, okay, if we're talking about what someone can actually borrow who's earning 30,000, what kind of options do they have to sort of maximize their possibilities?
So somebody earning 30, typically a bank will give about 4.5 times their income. So that's what the banks will generally give them, right? But the good thing is, after the pandemic, the banks have relaxed some of these things, right? Especially with the first time buyers, they have relaxed things. So some banks are even offering up to about 6 times your income, right? Now that sometimes comes at a cost, right? Because, the interest rate might be higher, but they are offering those options. So that is a good thing, because obviously house prices have gone up after the pandemic as well. So we see that quite a lot, right? At least in the last few months, we've seen house prices gone up, soaring up quite a lot, right? This is the feedback we are getting from the market. So looking at those, if you're getting that additional boost, it's good. So there are lenders who will offer you up to about 6 times your income. Some do 5.5.
Yeah.
It's always better than the 4.5, right? So yeah.
Yeah, it does make a huge difference, doesn't it? Because I think,
That's right.
4.5 times plus, 10% deposit, you're looking just under 150,000, which can't buy you much in the UK. Well, depending where you are.
Yeah, that's right, yeah.
All right, so if we're thinking now, there's also other mortgages for specific types of people, like if you're a professional, aren't there?
Yeah.
And they kind of help lend a little bit extra, don't they?
Yeah, that's right. So especially if you're a professional or starting off as a professional, there are some banks who look at you in a favorable way, right? Because they know that your salary is only going to go up, right? I'll take, for example, a junior doctor, right? So I don't think they start off at a very good salary, right? They start off at quite low salaries, but their salary will just go up by a few times over the years, right? So banks see that, right? So because they see that, they offer them better income multiples for these kind of people, right? So if you're a lawyer or a doctor or engineer, accountant, there are so many categories. I've only named a few, right? But you will qualify, right? So it's probably always best a good idea to speak to an advisor who can guide you on this one.
Yeah, definitely. And there's also kind of a few ways that mum and dad might be able to help play a part in the mortgage. Just when they think that you've flown the nest, you're asking for something again. But there's something called a joint borrower sole proprietor mortgage. Do you want to explain to everybody how that can help?
That's very, very helpful, that one, right? So sometimes you can afford to pay the mortgage, but you can't make the affordability work so that the bank can give you the mortgage that's needed, right? That's when this scheme comes into play. Not all banks offer this, but there are a few who offer this, which is always very, very helpful, right? So what happens with this is, in the past we had the guarantor schemes, right? So the guarantor schemes are kind of being replaced by this one, right? So the mom and dad's income also can be taken into account, right? So in arriving at how much you can borrow, right? So they can put their names onto the mortgage application, and let's say you're earning 30k and your parents say is earning 50k, right? So they can take into account the whole 80,000 as an income, right? Obviously they'll check various other things for your parents, but even if that helps you with borrowing another 50,000 more, always helpful, right? But the good thing about this scheme is, from your parents' point of view, usually if you're on another mortgage, you have to pay additional 3% stamp duty. In this case, you don't pay the stamp duty. So that's something you can go and tell your parents, right? Saying that, don't worry, you don't have to pay 3% stamp duty and it'll save you money as well, right? So they can be a joint applicant, right? But only thing is their name won't be on the deed, right? So because their name is not on the deed, they don't pay the stamp duty. So that's a massive advantage. So that will boost you, right? So your 30K plus their income will boost you and you can get more money because again, house prices are going up. There are properties you can buy for that range, but house prices are going up. And if you're coming more close to cities, the house prices anyway starts to go up, right? So yeah.
Definitely.
Getting your mortgage online doesn't have to be complicated. At WIS, our website will help guide you through step by step. Our fully qualified advisors can help you get the most suitable mortgage for you. Then you can relax, safe in the knowledge that WIS are working in the background to get your mortgage approved. WIS. Online mortgages made simple.
And there's also the bank of mum and dad. They can always help in that way as well, can't they?
Yeah, so if your parents say, okay, I don't want to be in the deed, they can donate you some money, right? So it has to be a donation, right? It has to come to you, right? It has to be a gift, right? So they say, can we have a donor's letter sort of thing? So it has to be a gift from them. It's not a loan, because if it's a loan, it's a commitment, and then it works the other way, right? So long as they are giving you money saying, okay, here's our contribution towards your house, and that's for you, our banks are happy with it. We just need to get a letter from the parents, and most of the time we need to take their bank statements as well, because bank will want to see that this is sort of legitimate money that the parents have earned, right? So long as we can prove that to the bank will be more than happy to help you, right? So that will definitely boost you getting a mortgage. It's not only the deposit, but sometimes from your 10%, if it becomes a 25% deposit with the contribution, banks sometimes change your income multiple, because a lot of people don't know this, right? So if it does change your income multiple, maybe from 4.5 times, it might go up to 5 times, right? So if it does that, that will also boost you a little bit, right? So it will always be helpful.
Definitely. And there's also a way that sort of we can maybe extend the mortgage term, see if that helps with the borrowing amount, isn't there, FD?
Yeah, that's always helpful. I mean, not everybody can do that, because banks will, once you sort of hit 45 years, you can't really extend mortgage. The banks will only give you about 25 years, right? So up to about 25 years, the normal 4.5 times works with most banks, right? But then if you sometimes extend it to 30 years or 35, 40 years, now that can help you as well, right? Because then, the monthly payment comes down, and sometimes the bank says, okay, we'll give you a little bit more money if you extend your term, right? So that can work, right? So that is also always helpful if you can do that. But obviously that is for the junior borrowers, right? So once you hit 45, it becomes a little difficult, right? So anybody under the age of 45, that option is also available.
Definitely. And there is another way as well. We like to kind of look at all different types of options here. So this is a different thing, but it's shared ownership, and it's kind of getting your step up onto the property ladder, isn't it, FD?
Yeah, definitely. Shared ownership is a scheme. It's run mainly by housing associations, right? So what the associations, what they do is they want to help you get on top of the property ladder. That's why it's a fantastic scheme, right? So let's say the house is worth 300,000. They'll say, okay, you buy 50% of the house, right? We will buy 50% of the house, pay rent for the portion you occupy, but get the mortgage on the 50%, right? Now that is helpful, right? Because you're not trying to get the mortgage on the entire, say, 300,000 property. You're only looking at 150,000 property. Your share is only 150, right? So that is always helpful. So if you're stuck, that might be a way in, right? But only thing is, these schemes are not available for all houses, right? So there are housing associations who do it, and it's kind of restricted, right? So either you have to buy from somebody who's coming out of the scheme, or you have to buy one specifically
a new build.
Yeah, that's right. Yeah,
and but it's a good thing in terms of the deposit size. That's only on the amount that you're purchasing, so 5% deposit is a minimum, I believe. So that's also a good thing. But there can be some extra costs involved if you want to purchase, or staircasing it's called, to purchase more of the property. So that's definitely something to look at. But it is a great option if you maybe don't have as much as you need to buy a property outright. So there is another thing which I think is just an excellent scheme, and it's ending soon. So this is definitely one to sort of take up sort of as soon as possible if it was something you were interested in. It's called the Help to Buy scheme. Do you want to tell us a bit more about that?
Oh yeah. Okay, yeah, I think we've done a few videos on Help to Buy before.
Yes.
I mean, that's a fantastic scheme. The government contributes 20%, right? So let's say you don't have the mom and dad option, the government will be,
Your mom and
can
dad.
substitute. Yeah, they'll be
Yeah.
the substitute, right? So they will give up to 20% of the property value. So if you use the 300,000 example, 20% contribution from the government is £60,000, right? So
Yeah.
you only have to worry about a 240,000 mortgage, right? So you now don't have to worry about the 300,000 mortgage, right? So that is always helpful. But like you said, unfortunately, the scheme is supposed to end March 2023, right? So there's only a few months to go. Hopefully, the government will come up with some similar scheme, but as of now, there's no announcements as such in that. Yeah. So if you're interested, get in soon.
Quick.
Because yeah. Because there is a lot of demand for this, because people know that the scheme is ending, right? And obviously there are some rules around that as well. So most of the houses have to be built before a certain period of time, right? So therefore, get in quick if you are interested in the Help to Buy scheme. Like I said, there is videos we've done on this. If you want anything specific, please look at it, because we have spoken about the pros and the cons of these schemes as well.
Yeah, definitely. Is there anything else that you wanted to add, Ifti, or anything that people should be concerned about if they're earning this salary looking to get a mortgage?
Well, it's always a starting point, right? I was earning less than that when I got my first mortgage, right? So it's always a starting point. Again, a lot of people look at it as a property ladder, right? Getting into the property ladder, you got to start somewhere, right? Because sometimes people say, oh, I'll wait till my next pay rise, and they may not even get a pay rise, right? Because UK, on average, people get 1 or 2% pay rise, maybe 3% if you're lucky for most, right? Obviously, some people get more than that, but by the time you wait for your next pay rise, house prices may have gone up far more than that, right? So it might be out of reach. So if you are interested, and if you think you can do it, better than paying rent, I think, right? In most instances, again, get advice on this, right? It's not the same answer for everybody. So if you're interested, let it be your starter home, right? A few years down the line, the house price might have increased. You would have created more equity, so you can use that equity and move on to the next property, right? I think 30,000 is a good starting point. Yes, you might not get a house in London, but you may get something where you might be able to commute to London, right? There are studios you can buy, there are 1-bedroom houses you can buy, which are sort of on the lower end, right? So that might be a good starting point. And look at combinations, right? Because we spoke about a few schemes, right? So if you can combine something like Help to Buy, and also you can combine your parents as well to help you out, to chip in with some money, that could be a good combination. So there are a lot of things you can do that way, right? Because let's say your parents are not on a mortgage, right? So maybe you all can do a joint borrow scheme as well, right? So there are combinations you can use as well, right, to make it work. So that is not like a standard product. So you probably want to get specialist advice on those areas. So with that, I think you can make it work, right? So I think 30,000 is a very good starting point for most.
Definitely. And also use your mortgage advisor for advice. Like, we can come up with a plan for you. It doesn't have to be necessarily someone who's looking to buy now. Like, if you want a plan, if you want to know, how many months it will take until you can potentially buy something, we can also help kind of devise that plan for you and let you know kind of your options.
So I was going to say that there are schemes like the LISA, right, or the LISA you call it, right, where the government contributes towards your deposit as well. So there are schemes like that which are like not a mortgage itself, but that helps you get onto a mortgage property ladder, right? So you might want to consider those schemes as well. But if you speak to advisors, usually you can gather these points, right? And that will help you save money as well, right? So, in the long run, it's always helpful. There are a lot of advisors out there who offer advice for free, right? So make use of that.
Yes, like us. I just want to put a reminder out there that these points may or may not be applicable to everybody. So if you are unsure if they're suitable for you, please do reach out to an advisor. And if you don't have an advisor, I will leave our contact details below, as we are always more than happy to help. A little reminder that as a mortgage is secured against your house or property, it may be repossessed if you do not keep up with the mortgage repayments. Thank you for joining us again today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.